Geopolitics has been a very important topic for markets and economies so far this year. Earlier this year, when the Iran war started, you saw big spikes in oil prices that led to lots of worries about inflation, the impact that might have on monetary policy, and you saw a fair amount of equity market volatility coinciding with that. Since then, we've seen a nice recovery in equity markets, but what we've seen with the conflict itself is that it's been on again, off again. Seems like we're getting some relief, maybe coming closer to some type of agreement that might end the war, and then suddenly things flare back up again. Quite often, investors ask me, well, what does that mean for equity markets, this on again, off again nature of the conflict? And I think you can see that in the market itself, that after that initial bout of downside volatility and then a quick recovery, the market is tending to react a lot less to every new announcement coming out of the war. Now, don't get me wrong. War of any kind is a terrible thing. But in a cold-hearted capitalist and investment sense, we really have to think about what are the impacts on the war, on the broader global economy, and on corporate results and equity markets and so forth. And one of the reasons I think that this on-again, off-again war is having less impact on markets today than it did initially is I think it's becoming clearer and clearer that the global economic impacts of the war are fairly contained. That yes, there's some impact on oil prices, but even those have come down quite a bit from where they were at the peak just a few months ago. And the war doesn't seem to be spreading out a lot more broadly. It's staying fairly confined to Iran or more broadly throughout the Middle East, but it's not getting bigger from there. All of that limits the global economic implications of the war. And I think the market is coming to realize that. While it might be frustrating that we're not getting some resolution here, some end to the conflict, I think the market is rightly recognizing that so long as things stay contained, so long as you don't get too big a spike in oil prices that's persistent from here, probably the global implications of all of this from a purely economic standpoint are somewhat limited, and markets tend to move on from those types of things. These are terrible humanitarian tragedies, but what the market's really going to care about are the economic impacts, and those seem to be somewhat limited in the conflict's current state.
Hi, this is Ken Fisher. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.